And as we were talking about, President Trump having his tariffs knocked down by the Supreme Court. And joining us now to get a little bit of a perspective from investors and their thoughts on it is Michael Dehal, Senior Portfolio Manager at Raymond James. Michael, thank you very much for joining us. Initial reaction, we've been waiting for this for a while, and all of a sudden it's here, and it almost doesn't seem real.
Yeah, thank you, Roger. Yeah, we've been waiting since November for this ruling decision to come out, and it's finally come out. The market reaction is positive. I think investors are relieved. So you're seeing a bid on a lot of the retail stocks that were taken down during Liberation Day and all that, right? You're also seeing emerging markets. India also going higher, and other emerging market countries that were impacted by the tariffs. So now, it's a big relief.
And I mean, the reaction from the markets right now, I mean, that's the whoo. But I mean, now we have to start processing it because there are options for him to bring in tariffs, different tariffs, but still bring them in.
Yeah, but that would take time. Honestly, that's going to take some time. And I think if he does bring in uses other levers, other sections and authorities, right, that will probably take time, and it'll probably be under more scrutiny, right? But I think the first question is how and when are these tariffs going to get refunded to these companies? Another bonus is that we could see inflation come down, which could help the Fed cut rates this year as well.
So there's a lot. Could Trump? Do you feel Trump could be caught up in that and have no choice but to move forward with not trying to bring any other tariffs in because he's been pushing for that cut with the from the Fed, and if the markets react to this and
It could be. Obviously, Trump wants lower interest rates, right? But at the same time, Trump has been using this card to create trade deals with other countries around the world and stuff, right? So if countries are looking at Trump now that, hey, your Supreme Court has overturned these trade deals, right? Obviously, Trump's going to use other levers for this.
And who stands to benefit? I mean, let's go back to the rebates or the returns. Yeah. We might not. I mean, we're not even sure if companies will even see that. Will that have an impact? I mean, they've already factored in for it, and so does it just be a bonus if they actually get the money back?
Yeah, it'll definitely be a bonus, right? Companies like Costco, they actually did, have a lawsuit against the administration on these tariffs, right? So it could, if the companies do get some of these refunds, it'll definitely increase their gross margins and all that, right? That is a bonus. The sector that does lose out is the consumer. Obviously, consumers will not get repaid back the higher prices that they did pay in the beginning, but companies do stand to benefit, and that's where you're seeing the positive reaction in retail stocks, and even auto stocks have gone up as well.
Okay, and that's the initial. Longer term, for which sectors stand to benefit the most from this, do you think?
Retail, consumer discretionary. Since the beginning of the year, you're seeing a rotation out of consumer discretionary into consumer staples. I think it's been the biggest divergence between consumer staples and discretionary in 13, 14 years, right? Staples sector is up 15% for the year. Discretionary is down, I think, 11, 12%, driven primarily by Amazon and Tesla, right? So discretionary does stand to benefit from this ruling, as well as other sectors. Financials is another sector that we do like that could benefit from this. Lower interest rates, increased M&A activity, IPO listings could help financials. And obviously, the third sector is technology. Technology, since the beginning of the year, has been under a lot of pressure, particularly the software sector. And we do think that this could help technology stocks, have a bid.
All right, and let's talk about that with the tech stocks and software. With AI, they've taken a pummeling with it. Is that overreaction?
We think, Roger, it's overreacted, it's overdone. I think, markets have overreacted, thinking that AI is going to eat the lunch of some of these big software names. You're seeing Microsoft down over 17% for the year. Right? If you look at the last quarterly earnings, they had a 40% year-over-year growth in Azure and in their cloud business, right? And they're seeing monetization of AI. The Copilot has 15 million paid users, right? So, some of these software companies have overdone on the downside. Even cybersecurity, Palo Alto Networks reported earnings the other day. Great top line, bottom line increase in revenue and earnings per share, but that stock was taken down with the AI jitters as well.
And with that, I mean, what gives you the confidence that software will be integrating AI as opposed to being replaced by it?
Well, we do think that software, it goes hand in hand, right? So like I mentioned with ServiceNow, with Microsoft, they're using AI and they are definitely monetizing AI in their cloud business and in their software solutions for customers.
And are we starting to see more and more companies now? Is this the year that we see that with the integration of AI?
Absolutely.
We've moved beyond everybody talking about AI.
Yeah.
Let's start I mean, it's being used obviously, but really being used.
Yeah, and this is the year we're going to see the benefits of AI. So you're seeing it with Meta even. And Meta, I know they're getting a lot of scrutiny over their CapEx spend on AI. This year is spending between $115 to $135 billion on AI in 2026. But you're seeing the monetization in Meta, right? They have 3.6 billion daily active users that they can leverage AI tools, models with these users among all their different business lines.
All right, I want to get in one more that you've talked about Meta and Microsoft, but Morgan Stanley, we're staying with the M's.
Yeah, triple M today. Morgan Stanley, it's a great financial company in the U.S., right? They stand to benefit on a number of different levers, a strong economic backdrop for the U.S., increased stimulus, monetary easing. All that is a positive for the U.S. financials. And Morgan Stanley being a leading investment bank, they do benefit from IPO listings. And we're going to have a number of possible big name IPOs with OpenAI possibly and SpaceX listing this year in the U.S. And Morgan Stanley is standing to benefit. And also with elevated equity markets, the wealth management business do get increased revenue from higher stock prices.
Okay, we're going to have to wrap it up there, but thank you very much, as always, for joining us in studio, Michael. Appreciate it. Have yourself a great weekend.
Yeah, thank you.
Cheers. That's Michael Dehal, Senior Portfolio Manager at Raymond James.